Guys, this is Rudy coming to you live from Palm Beach in Florida. It is Friday evening. It is November the 11th. It's about 9:30 p.m. So I'm just going to wrap up some information I found and shared with you from today, and I'll tell you where it comes from. So just by way of a little bit of background first, on our channel, Oscar Mike, who might also be Mike Oscar, I wouldn't know, said had a great day buying more PBR. Can you please do a video comparing PBR to Sandridge, Journey, Baytex, and Devon? Well, to be fair, firstly, I said to Oscar and Mike, yes, I will try for this weekend. So it's Friday evening and I'm going to do it right now. But what I was going to say, to be fair, arguably, Petrobras, Sandridge, Journey, Baytex, and Devon don't necessarily belong sort of in the same sentence because they are very, very different, yet they are probably also somewhat similar. But the interesting thing about this is that I don't really spend too much time. In fact, I don't think I've spent too much time with you guys sharing some small cap Canadian stocks before. And a couple of these are small cap Canadian oil sands or tar sands stocks from Alberta, Canada. And of course, many of you will be familiar with Petrobras, which I've covered multiple times now. And of course, you'd be familiar with Devon too. But I thought, like, hey, why not? Let's take a dive here and see what's going on. So, in the first place, for me as a US tax person, because I live in the United States, Journey Energy and Baytex are OTC, which means over the counter. So the reason why I red flagged that or red arrowed it is because if it's trading over the counter, sometimes you have a liquidity problem. Now, if you buy it and you just hold it, you're probably mostly okay. But that's just something to be aware of. You're buying these over the counter. They're not necessarily trading on the exchange, and there's not a lot of volume in terms of the number of shares traded. Having said that, though, towards the bottom of the screen here, you can actually see that the volume is not too bad. 180,000, 326,000. This was as of today. And then right at the bottom, you can see the industry. So Sandridge said it's oil US integrated. And then a couple of these are similar. We have oil and Canadian dollar exploration and product, oil US dollar exploration and product. That's Devon. And then Petrobras, of course, emerging markets integrated oil company. So they are similar, but not the same. If we look at the technicals for all the technical gurus out there, the 20-day raw stochastic, when it gets above 80, it's probably overbought. So at a quick glance here, using just the stochastic as a guideline or benchmark, the 20-day raw stochastic, we can view at a glance that it seems as if Journey Energy at 88% and getting very close, Baytex Energy is getting close to being overbought, right? So now, according to the 20-day raw stochastic, is not a time to get in. When can you get in? So if you base your decisions on the 20-day raw stochastic, you want to be below 20. So on that line, the only one that kind of meets that criteria is Petrobras, and Sandridge and Devon, respectively, don't provide too much resistance in terms of the 20-day stochastic. I'm going to ignore the rest because I want to get through this without keeping you for too long. If we look at the performance, and here I ignore 5 days, 3 months, and I look at 6 months, then if you were long on Journey Energy, you had a good time, which is probably one of the reasons why it might be somewhat overbought, because when times are good, people buy in and lots of people buy the shares. As for the rest of them, the performance has been reasonably okay. This is over the last 6 months, with the exception of Petrobras. But to be fair, most of the loss on Petrobras has come during the last month or so, which also overlaps the presidential elections that they had in Brazil last month, now just a few days old. Other things we can look at is the statistics. So on the key statistics here, we're looking at the annual sales compared to the market cap. So on Sandridge, I have a $733 million market cap. And this is a company that has $168 million in annual sales. Not too bad, but quite a bit of a delta, because look what happens here. On Baytex, you have a $3 million market cap, but it's doing 1.2 million in sales. So the market cap is less than 3 times greater than the annual sales. Of course, it depends how profitable they are. when they're generating those sales, but we'll see how we go. Devon Energy, a $12 billion company with a $45 billion market cap. And the outlier here is Petrobras. Petrobras is actually doing almost $84 billion in sales, and its market cap today was only $72 billion. So Petrobras' sales exceeds its market cap quite handsomely. Other things, yeah, we'll skip the rest. Let's go here. So most recent earnings, we can see that the positive earnings is pretty good. In fact, for all of these, with the exception of Journey, we have earnings that are positive, and in addition to that, we have a PE ratio, so a stock price to earnings ratio, that is very favorable for almost all of them. In fact, in this particular example, Devon looks like the expensive one, and Devon is not expensive. It's actually quite cheap right now. But look at the rest. Sandridge only a PE of only 4.3, Baytex 3.8, Petrobras the cheapest by far. As I said in my previous two videos, Petrobras is the cheapest super major energy company that you can buy right now with a PE of only 2.5, less than 2.5. If you have been long for the past year, so here I'm looking year to date, 2022, we're almost done with 2022, 11 and 10 and a half months into the year. If you were long on these small caps, you did very, very well. In fact, I can add Devon there, up 63% year to date. But look at the performance on these ones. So here we have Journey at 140%. And then these two guys here, Baytex and Sandridge, 85, 80, and 96% up for the year. So if you're long in those, you're probably feeling very, very happy. The question that begs is now a good time to get in? And that's what we try to answer when we do this work for you. Sandridge, you can buy right now for 20 bucks. It's kind of sitting just right of center on its 52-week range, which was, interestingly enough, between, let's say, 10 and 30, just to make it an easier number. And this is 20, so it's almost in the middle of that 52-week range. It's not a small company. I mean, it's a small cap blend, but $755 million market cap, not too bad. The PE ratio at 4, also not too bad. 71% held by institutions, only 3% short interest. So very attractively priced Sandridge at $20 per share. How about Journey? Journey you can buy for $5. Interesting spread on the 52-week range here between $1 and $6. So it's actually sort of trending towards the high side. Only $300 million market cap, so even smaller than Sandridge. PE ratio favorable here as well, 5.35, very, very favorable. Not too many institutional investors here, so I'd lean towards Journey more than Sandridge, just by way of an example. How about Baytex? Similarly, you can buy Baytex for $5.60. It's spread over the 52-week range, $2.40 to $7. It's a $3.1 billion company, so significantly larger. It's a mid-cap blend from a Canadian point of view. PE ratio of less than 4, very attractively priced, only held 15% by institutions, and currently there's no short interest on Baytex. Devon, of course, is one of my favorites. You can buy Devon for 70 bucks. I wish I had bought Devon when it was significantly cheaper, like 40 bucks or so, but I didn't. And, I probably should have. I don't know if I want to buy Devon at $72, despite the fact that the PE ratio is only 7. It is a big company. It's a $46 billion company, but it's trading high. If there's a significant pullback on Devon, I might be tempted to jump in, because in addition to it being a fantastic energy company, well-managed, well-run company, it also pays this huge fat dividend of $5, which is currently yielding 7.5%. That's not too bad. Of course, all the institutions have jumped in, 77%, 3% short interest. And then there's Petrobras. Now, Petrobras, of course, is one that you already know I am long in. Now it's on sale, $11.49. Is the price going to go up or down? Who knows, right? It could go up some more today. It went up 4%. So not a bad day. But look at the range, the 52-week range here, 958 to 1632. It's sitting left of center. So it's pulled back quite sharply, obviously, as you can see on this little graph here as well. Over the last month or so, it's really pulled back sharply because of the Brazilian elections. And I think there's a lot of political noise there that's going to subside sort of as time goes by, but we'll see where we go. But here's the sort of meat on the bone, right? So you have a $70 $5 billion super major, an emerging market stock with a price earnings ratio of 2. It doesn't come much better than that. Not a lot of institutions are in on this deal, 21%. And the short interest only 2%. You got to be nuts to short Petrobras at the current price. But so this is a video with a little bit of a difference because these are stocks that I don't typically cover. I know many of you are long in Petrobras and Devon, but how about Journey, Baytex, and Sandridge? If you are long in those, then maybe you can tell us if you've made money so far year to date or in the past year or so. Congrats, well done, awesome job, great picks. I know that there are many small cap Canadian stocks that are very, very favorable for investment right now. So maybe what you can do for us as a community is if you know any of those small cap Canadian stocks in addition to Baytex and Journey, maybe highlight them for us and let us know what you're looking at, because hey, you know what? If there's a party going on, why don't we invite everybody else and join in on the big feast? So guys, that's it for this video, and thanks for watching. I'll talk to you soon. Bye-bye.